I was contemplating the aspect of little investors versus the giant, monolithic, huge, giant aspects of all the different giant portfolios that are sitting out there. Your retirement fund, CalPERS, insurance companies, huge companies that have machines that sit there and do massive amounts of trading based upon multiple data points. Well, they're using computers, except now we've had recently a big jump in artificial intelligence. Do you think it's possible that we can use artificial intelligence to run our investments the same way the giant companies use computers to run their investments? You know what? There's a massive amount of information out there. And when it starts to deal with artificial intelligence, they have a lot of advantages that I think will help start balancing the playing field. And we just might have a chance going up against the big boys in the process, or big girls, whichever you want to call them, the big gorillas by the time we're all done. How's that? That's even better. Let's look at this. Okay, with an AI, a small investor, you compare with large investors that use program trading, because really you can start making better investment decisions. AI can analyze vast amounts of historical data, make predictions as to how that can actually sit down there and focus in today's market. It can also grab in data points as to what happened when we had this type of economic growth or decline. What happened over here? Are we bull, bear? Are we in the middle? What are the whole process? What are the patterns? Really, they can identify a whole series of things that we would have to pour over the data for days, weeks, maybe even months before we can pick it up. It really will help us make better investment decisions. And you can automate your strategies. You too can put 7 to 9 different points on a decision of bid, buy, sell, whatever you want to do in the process. So that being said, you can sit down there and have your account all pre-programmed. If these 9 things happen, and all of a sudden you buy, sell, whatever you want to do. All of a sudden now you can automate it and have that quick capture that you see so often in program trading. Reduce the cost overall. The AI-powered investment platforms, they charge lower prices than the typical investment managers. There's no humans to sit down there. You don't have to buy donuts for your artificial intelligence program. And by the way, they don't buy Ferraris on your dime, just in case you want to know. Now, you had to pay for their insurance, except for those Ferraris and those rubber tires that they burn up so quickly. No, you don't have to do that. So that being said, it can reduce your overall cost. You can automate the aspect of the investment strategies, reduce your costs, and it works by using machine algorithms to analyze data and make decisions. So the machine learning algorithms, they use large data sets and really we can't do that. You can't compile months and years of data on a single stock. Well, I guess you can. It just takes you a long time. And by the time you figure it out, the stock has moved on from you, started thinking about the whole aspect of it. And look at stock prices, financial news, economic news. Did the chairman of the Fed sneeze today and catch a cold? All of a sudden, oh, the market plunges. Oh, no, the world's going to end. I'm not kidding. Sometimes those ridiculous things happen. Sometimes somebody launches a rumor on Wall Street and people believe it. Oh, sell, sell, sell. Somebody makes a massive amount of money because everybody is selling and they're buying. Then yeah. So once trained the algorithms, they can really predict future market movements in the process. And also then all of a sudden you can start having better performance because your platform can help outperform traditional investment managers over the long term. Reduced risk. By the time you're all done, the AI can really be used to reduce the overall risk, identifying potential footfalls, and then also the convenience. You can sit down and just open up your phone and access your account anywhere in the world and execute orders or give direction to your AI to execute it based upon certain parameters. And also, they charge lower fees overall. You saw this picture before with a big monster looking down at the poor little puppy. Well, you can be a little puppy, but now you may have teeth finally to bite that dog's nose in the process. So you too, using an AI-powered investment platform, all of a sudden now you start getting the same type of technology that the big players in the market, the big gorillas, they've been using for years and years to try to destroy the small investor and take money out of their pockets. So that being said, when you invest in AI-powered funds, there's a number of AI-powered funds available. Pay attention to those because AI is going to be a big thing. Here are the top 5 companies as of the recording today. The big 5: Wealthfront, Betterment, Quantamental, Acorns, and Stash. Who knows what it'll be tomorrow? But regardless, these 5 are the number 1 companies as of the time of this recording. And I'm certain to be other ones out there. Go check them out in the process. they all use some type of machine learning algorithm. And by learning, just, and preparing for this type of program, I sat down and I typed in something and the AI was wrong. You can't always trust the AI. And so it wanted feedback. I said, you were wrong on this, and you got to teach it and everything in the process so it learns as to what you're doing. And by the time you're done, if you give it feedback, it'll keep on asking for more feedback to make sure it gets it right. The same thing with the machine learning algorithm. You correct it, and if you don't follow the advice, you tell it, and then it won't make the same mistake for you. So you can actually train your own AI to do what you want it to do. The portfolio optimization, really, we need to mix on a regular basis. You can program your AI, and your AI may make formal recommendations to you. It'd be a good idea if you did the following 7 things. And all of a sudden now you get almost the recommendations as good as a human in the process. Risk management, and AI can identify and mitigate risks probably faster than a human can, and it can identify stocks that are at risk of underperforming or developing hedging strategies to make sure it performs up to your expectations. The better performance, they've been shown to outperform traditional managers, and you have the reduced risk, and it's really convenient. You can put in your shopping cart whenever you want to. They're easy to use and access from anywhere in the world, and they're affordable compared to what traditional fees are. So getting started, choose an AI-powered investment platform. There's a number, I showed you 5. Consider factors about investment philosophy, fees and features, opening account. It's all easy. They want to take your money as quickly as possible and painless. You won't even feel a thing. Anyway, so fund your account. Okay, set your investment goals and risk tolerance, and that's a big deal. All of us have different levels of risk tolerance. You always want to keep 10% in the wild factor, but the other 90%, make certain that you really have a balanced portfolio. Set your investment goals and risk tolerance, and then invest. So by the time you're all done, in conclusion, you saw 5 companies in this space providing investors with powerful tools to make them even better. And the AIs will only get better over time, and you'll see another generations coming up. You'll even see AI start generating more AIs that do a better job. So the investment platforms and the funds, we can start making better investment decisions. Sometimes, eventually, will be comparable to the big players in the whole field, and us too. By the time it's all done, we can program our little baby AIs to sit down and take on those big players out there and beat them. Well, maybe do as good as. Well, hopefully survive. Anyway, take care.